You can invest in stocks, you can invest in bonds, you can invest in a lot of things, but one thing you mustn't leave out of your portfolio is an investment. Bill Gates is the richest guy in the world, not because he's a great programmer, but because everybody has time. Even if you don't have a lot of money, everybody has time. If you can use that time, that's a lot of time that you can actually use and make a lot of money.
Hey, hi, Modupe. Good afternoon.
Good afternoon.
So, thank you so much for approaching me with about this because, as you know, finance is something that I'm still learning about. So, I'm really, really glad to have this conversation. I've known you for maybe, almost 4 years now, and honestly, ever since I've known you, I've always known that you've been a finance person. I don't even know how. I think you're probably one of the first people that started talking to me about investments and how you invest. And I was just like, wow, this person is a guru. So, but I know that you won't call yourself that. But to me, of course, just learning, I was just like, this person knows everything. So I'd like to start by just understanding from, your perspective a little bit about yourself, and then how did you enter this world of finance? Because I know you won't call yourself a finance person, but you seem to have it's something that you're really interested in. So how did you start?
Okay, so I think that's a very good question. I wouldn't call myself a finance person because, interestingly enough, I have a background in tech. I studied engineering in university, and even all the while when I was in school, I was known as a computer geek. But all the time, I always thought, oh, fine, you're in tech, but you are going to end up very rich like Bill Gates. And I assumed it would just happen like that because, at the time, Bill Gates was the richest guy in the world. But then there was this thing that people would say then that Bill Gates is the richest guy in the world, not because he's a great programmer, but because he's a great businessman. As I grew older, it started to dawn on me that there was a gap in my learning in school. I'd learned everything about computers, about coding, about engineering. And I was expecting that, that was enough to set me up to be the next Bill Gates. But I just realized that wasn't enough. So, lucky for me, I made a friend with some guy in my department when I was in school. I've told that story in one of my videos actually. He was this guy that approached me. He wanted us to have a study group, right? And we studied together all through that semester. But by the end of the year, he started to tell me about other stuff he knew that were outside, school stuff. And he was the first person to introduce me to investing in stocks and things like that, and introduced me to a bunch of books that made me realize, well, there's a whole new world out there. And if you want to be rich, it's not just by writing the best programming languages or, coming up with Microsoft Windows. So that's how I got into it. But it took me getting into the workspace and having a bit of my own experience, right, to really, really learn. Because I tried all sorts of things. I read a lot of books. I tried stuff by myself, saw what worked in Nigeria, because some things would work in other countries, but not necessarily in Nigeria. And some things are just principles that work anywhere you go, whichever country you are. You just need to understand the context. So I learned a lot of it through experience. It was kind of interesting because there was a method to it. It wasn't as abstract as a lot of people made it seem. Making money or investing, there was a method to it. There was a science to it, and I could learn it. Exactly. Yeah. There were things I could learn, that I could follow. There was a video I did one time where I woke up very early one Sunday morning, and I decided to just do a video showing how I picked my stocks. I was half asleep, but I was just following the usual steps I follow. And I was still able to go through that video because it's just a bunch of steps to follow. It's not really so difficult. What gets people in trouble, especially when investing in stock market and other things, is when they get emotional and don't follow the rules that they themselves know. It's not so much that there are no rules to follow, but it's quite easy if you can keep your emotions in check.
Excellent. Thank you so much. So that's actually, I think, encouraging because for newbies, people who are not, versed in investing, it seems like a huge, just a huge unending mystery, like a sector where you don't really know, like you're almost just guessing where you're going to put your money. it feels like there's such a high potential for, for risk to just lose everything if you don't know what you're doing. So I think because of that, a lot of people who are risk adverse, like me, are just like, okay, no, it's okay. I'm not
I'll just put my
that's
money in the
something that I
bank.
can continue, right? So you've been into investing now for a couple for quite a while. I think I remember we were talking, and you were saying how you had been investing, gradually for a number of years. What do
Yeah.
you think has changed in the way or in your understanding of investing from the time you started, learning and actually investing, and until now?
Okay, so that's a cool question. So when I started investing, I worked with brands, or what should I call it, gut feeling. And I feel a lot of people that invest also go with gut feeling. So, oh fine, Tesla is a big company, you know, everybody is talking about Tesla, so I will go and buy 1,000 units of Tesla. That's not very intelligent. That's not a good reason to buy Tesla, even if Tesla is a good company, right? So for instance, I keep telling people there's certain stocks, popular names, that I do not buy today. It's not because the company is a bad company, but when I look at what I'm looking for in an investment, those companies don't bring it. So at the time when I started off, I more or less worked with what were the popular names, what were the big brands. But now I'm not afraid to. So earlier on, you mentioned sometimes people are afraid to invest, because of the risk, and
Yeah.
the other end of that spectrum is where you find people that are afraid to miss out on an opportunity. So
Ah,
so they're like, oh,
yeah,
everybody is
yeah,
doing crypto now. Let me too get into it. Everybody is doing this. Let me jump
yeah,
into let me jump on that
yeah,
bandwagon.
yeah,
And
yeah.
that's also a problem in itself, because I've just come to realize that there will always be an opportunity. There will always be something. Take your time, understand what you're investing in. There's one principle that Warren Buffett said that I believe in wholeheartedly. Don't invest in something you don't understand. So what has really
Very
changed in that period is now I take my time to understand whatever I'm investing in and why I'm investing in it. And the fact that something is a good investment doesn't mean I have to put my money in it. And I understand what I'm doing better now. So I don't do it just because, yeah, everybody else is talking about it, or it's a popular brand. That's one thing that has changed. Something else that has changed, I think, is also understanding that in terms of assets, when you're talking about paper assets, or you're talking about physical assets like property, they both have their pros and cons. Neither is better than the other. It depends on where you are in your investment journey and what you're trying to achieve. So for a long time, I always felt that, wow, property was the in thing, but I couldn't get into it because it was very capital intensive. And that actually is one
yeah.
of the downsides of property, because it's very capital intensive. And not only is it just capital intensive, and it's not very liquid either. So it's just to understand that
True.
there's no one investment. I think that's something else I've learned. There's no one single investment that is like a silver bullet that cures all your investment problems. Once you put all your money, just put your money in gold. Some people will swear by certain things. They're like, just put your money in gold. Gold
Yeah.
never goes down. That's not true. Gold goes down. You're like, just put your money in property. Property are as safe as houses. It's a British saying that it's as safe as houses. Yeah, maybe, but I mean, there was the housing crash in US in 2008.
Yeah.
So there's really no.
Yeah. It comes from people's this sort of like need, or to say, okay, I'm investing in this thing, it's safe, and that's all I have
Yeah,
to think about. Just put it in
and
this
that's not
one
your
thing.
exact.
I don't have to think about anything else. I don't have to keep trying to decide, the stock market goes up today, goes down tomorrow. It doesn't concern me. Do you
Doesn't
understand?
concern
Like,
you.
they want
So,
something that
so
is
that's
safe. Safe.
So that's the
And
thing. So what I was saying earlier on, something that I've learned is you can actually do that. So I don't spend all my, which is why I find it funny when you call me a guru. I don't spend all my waking moments thinking about my investments. I
watching
won't.
the stock
I mean,
go up.
anybody that
Oh
knows
my god.
me, I spend a lot of time watching movies. I spend a lot of time watching TV series. I spend a lot of time at work, and my work has nothing to do with finance. My work is totally different. So I really don't have a lot of time to sit around checking every single stock every single time. I
Sometimes
like
that's the impression people get, that to be able to do that, well,
you have to sit by and just study.
Yeah.
No, I don't. There are a lot of things I just let. Again, back to that whole fear of missing out. I don't allow that to influence my behavior. So I'm not afraid to miss out on a fantastic investment because I know there will always be another fantastic investment.
Yeah.
I just follow my rules or my steps. Once a year or max twice a year, I look at all the stocks I've invested in. I look at their performance in the previous year. It's like I do yearly appraisals for my stocks, for my investments. And then I chill. I sleep for another few months. I just decide, okay, so this is my strategy for this year in terms of investing. And that's what I do throughout the year. So every month I apply that strategy. It's really simple. It's not something that
It's really
requires.
simple, but now you're talking about plans and appraisals and strategies for investing. But no, it's just so really simple.
No. But my point is just the important thing is to have
Have
a
a plan.
have a plan, right? That you
Something that
apply.
works.
It's not something you have to do. Like you don't have to spend it every day thinking about your stocks and all that. You can actually set it and forget it. The stock traders that spend all their day, checking has the price gone up, has the price gone down. What I always tell my friends is if you buy the right stocks, then you don't have to worry if the price goes up or down because in the long run the price will go up, or either the price goes up or you get your dividends, returns some way or the other. But either way, you are not going to make a loss if you are buying into a company that is sustainable, or an investment that is sustainable. And that applies with property as well. There's something Robert Kiyosaki used to say that you make your money on the purchase. When you're investing in property, you're supposed to make the money when you sign the deal, not 5 years later. That's the difference between an investment and a speculative deal. If you are speculating on something, you are hoping that, oh, this money that I'm putting in now, in another 5 years, the money will grow. That is a speculative investment, which is fine. It works in some cases. You could get lucky. But what is actually safer is something that for instance, you're getting it at a discount. So let me use something. What's this? There's this bag. I can't remember the name of the bag. You might know it. That it's very, people consider it like an investment. It's very expensive. Like
Or like a designer bag.
yeah, it's a designer bag. I can't remember the name. It's Bark or something. It has a funny name like that. That you can't. I think you have to apply to buy the bag. You can't even. They don't sell it to anybody, right? Like they restrict the people that can buy it. Now the funny thing about that bag is people buy it hoping that the price will go up, and usually the price goes up, right? But what if you could buy it cheaper than the going rate now? Right? That's the kind of investment I will be looking for, not to buy it and then sit and wait and hope and pray. So that's the difference. Someone that buys it slightly lower than the going rate, maybe from someone else that needs to sell it, or versus someone that buys it and then hopes that in 5 years' time the price goes up. The two of them are not in the same, they don't get the same value for their money.
Yeah.
And that's how I see.
The importance of having a strategy when you actually do invest, so you know when you're investing what you're actually getting in that. The last year, well, a lot of things happened in the last year, but I think two big things happened for you. One is that, well, you left Nigeria, you moved to the UK, and then secondly, of course, COVID, happened. How did moving to London affect this plan or your strategy or the way that you invest? And then how did COVID, well, maybe let's start with moving out of Nigeria. How did that affect your plans or your strategy?
Any income you make, right, is taxed no matter where it comes from, right? So tax is a very big deal in the UK.
You make it sound like it's not a big deal.
So Interestingly enough, it is a big deal in Nigeria as well, and it's actually
Yeah.
a way people could invest in Nigeria. One of the lessons I learned in Nigeria was that there are certain ways you can manage your taxes better and actually make money, sort of, from managing your taxes well. Because again, when you look at it, whether you're in Nigeria or you're in UK, taxes are the biggest chunk of whatever you goes out of your salary.
Yeah.
If you're a 9 to 5 salary earner, 25% of your salary, or 20 to 25%, goes to the government, just straight from source, right? If you can get that back somehow legally, then it's better than any other investments you could have out there, because it's very unlikely you would get 25% investments knocking at your door like that. So that was it. But here, your income tax could go as high as, depending on what you earn, it could go as high as 40% in some cases. So that's close to like
Wow.
that's close. That's close to like half of what you're earning being taken by the government. I mean, they don't have oil here, so they take it quite seriously. And because, again, I'm an immigrant, I don't want any yawa to happen. So for the first, like, how many months when I got here, I just kept my money in savings accounts. I played it safe because I was like, how exactly do they handle taxes here?
Yeah.
Right. So I try to do some learning, do some reading, and all that. And in terms of what has really changed, I wouldn't call it a change. It's more of me understanding better the advantages we had in Nigeria and the risks as well. The biggest risk you have investing as a Nigerian is the currency. As a matter of fact, the biggest risk anybody in Nigeria has where finances are concerned is the currency. So let's say you put aside like 3 billion naira. Now, depending on what you're saving for, if you were planning to use that money to buy something that is being manufactured in the country, all well and good. Unfortunately for you, if you were planning to use that money to buy something that is being imported, that 3 million naira that you saved as a January 20, let's say you wanted to use it to buy a brand new car, you saved it as a January 2020. By December 2020, the number of dollars you can get for the 3 million naira has reduced drastically. Let's even say you saved 3 points. So what was the exchange rate? 3 points. Let's say you saved like 3.6 or thereabouts. That 3.6 is no longer 3.6. I mean, that 3.6 will come to about what, say, $100,000. I'm just speaking numbers. I might be off, but it comes to about $100,000 or thereabouts. But by December, that 3.6 million no longer converts to $100,000. It will convert to less. So again, the volatility of the currency is killing a lot of investments, right? Which is why what I tell my friends is, you can invest in stocks, you can invest in bonds, you can invest in a lot of things, but one thing you mustn't leave out of your portfolio is an investment in dollars.
Right.
You need to have something in foreign currency. If you can't buy shares in foreign companies, you need to have. I mean, there was a time the banks were selling euro bonds. You need to have something like that, something that keeps your money intact or protected from the volatility of the naira. That's one big lesson that I learned. I was lucky. I consider myself lucky because I mean, what, I got a job, and I'm earning foreign currency. But again, even if I hadn't moved, before I moved, I'd actually been telling a lot of my friends. I actually traveled sometime in 2019 and I opened an account in the US, right? And I put some money in there. And that money, just by being there, no, I'm not collecting interest on that account. Nothing. It's not a savings account, it's a current account, but I have to maintain a minimum balance to make sure they don't make deductions. But just by the money being there, it has increased in value significantly versus the naira in the space of 1 year.
And then COVID was like a huge thing last year. Did it change anything in the way you do your investing?
So COVID for me just helped me. It goes back to what I said earlier on, that there's no single investment channel that is better than everything else all the time. Because last year stocks did very well, but for a long time I had been telling a lot of my friends to put their money in mutual funds because I felt it was really good. Because mutual funds, I'm sure we had that conversation once. Because
Yes, you definitely had
because
this
you asked me, because I felt it was safe and the rates were usually better than inflation.
At the
right?
time, I think so,
At the
yeah.
time, yes. So as at 2018, 2017, I mean, rates were going as high as 15, 17%. Meanwhile, inflation was still around 11%. So it kind of made sense for you to put your money in mutual funds, and you didn't need a lot of capital to get into it. Just put 10,000 naira and you're fine. So it made sense then. But right last year, I'm talking about mutual funds were like 1%, 0.5%. Like it was ridiculous. Even now, it's still ridiculous. I think it's like 1% or
Yeah.
so. Meanwhile, your inflation is like what, close to 20%. It's like 17% or thereabout right now. So, like, you're not making any money if you put your money in mutual funds. So, if you held on to that advice since 2019, which is why I say I have to check every year. It's not every month, it's not every day, but at least once a year, have a look at all your investments, see which ones are performing well, which ones you might need to just sub pedal on and maybe focus more on others.
Despite the fact that you are, of course, investing in foreign currency, you're no longer in Nigeria, and you are also, like you said, you're diversifying. You still invest in the Nigerian stock market.
Yes.
So why? I'm not saying that you shouldn't, but what is the strategy? I'm going to keep using that word. What is the strategy behind investing in the Nigerian
I'm
stock
afraid
market?
we're a new strategy because you make it seem very, like
For me, it's
No.
just
I don't have delusions of grandeur. I have an actual recipe for grandeur.
there was a video I did where I said, how do you choose between multiple investment options, right? And some of the things that I consider is how much am I making? How much returns does this investment give me? The way the foreign, like when I say foreign, I'm talking about US markets, UK markets, the way they're set up, because the economy is a bit more stable, the currency is a bit more stable. Inflation in UK is less than 1%, for crying out loud. So if you give them an investment that has returns of like what, 3-4%, they'll be salivating, like they'll be ecstatic. But that's not that's not enough for me. I'm in Nigerian, please. I'm used to proper investments that bring proper money. And the funny thing is, when you compare companies in the Nigerian stock market with companies on the New York Stock Exchange or London Stock Exchange, when you look at fundamentals, I said earlier on that there's certain key things I look out for when I'm picking stocks, for instance. When you
Yeah.
look at those things, you see Nigerian companies that still have a lot of this and can actually compete favorably with companies here in terms of size, in terms of working capital, in terms of profits, dividend payouts. Okay, in terms of things, in terms of profitability, you have very, very good companies on the Nigerian Stock Exchange. You have a lot of crappy ones as well, but you have some very good ones. And these are companies I've invested in over time, right? So again, I had a habit I had built over the years. Every month, I put some money in the stock exchange. I pick which companies I feel are at the beginning of the year. I would have picked which companies that I feel are doing quite well, and then every month throughout that year, I put some money in the stock exchange and invest. So I've actually built a nice portfolio over time. And
Right.
even last year with the pandemic and everything, I still saw a lot of these companies pay out good dividends, still perform well, still make profits, while companies in the UK, in the US were struggling to make profits. Some of these Nigerian companies, despite the very tough environment, were still able to declare profits and pay out dividends and do quite well. So it just made more sense for me. The only thing that I see that holds a lot of these companies back in terms of perception is basically the fact that, oh, they're in Nigeria, right? They don't have that. The country itself, the stock exchange doesn't have the reputation that, when you say New York Stock Exchange, sound quite, big and grand. But the truth is, when you look at the company to company, you still have a lot of very good companies on the Nigerian Stock Exchange. Now, the interesting thing is, because if I wasn't a Nigerian, I probably won't even bother looking at the Nigerian Stock Exchange. Do you understand? Like, if I wasn't a Nigerian, I wouldn't check to know. Like, since I've been here now, I've only checked like 2 or 3 other stock exchanges. Like I've checked the New York Stock Exchange, I've checked the London Stock Exchange, I picked a few companies here and there. I mean, I look at companies. They're good companies on some of the Chinese stock exchanges too, but I'm like China. They want to invest in the company in China, which is probably how other people look at Nigerian companies as well. Like, wow, this company in terms of fundamentals it looks really good, but Nigeria, do I want to invest in Nigeria? Do you understand? But because I know that I'm in Nigeria and I'm not gonna run away anytime soon, I'm still going to come back, and I'm invested like emotionally, not just financially, in the country doing well. So I really have no qualms putting my money there. My money is there. I mean, this country is going to be around in another how many years? It's fine.
Interesting. That's really
Yeah.
I think really good as well. Because just like you said, you're emotionally invested in the welfare, of the country.
Yeah.
So why not, invest in companies that are doing well here?
Yeah, and
There's
so sorry, let me just add.
Go ahead. Go ahead.
It's not just emotional. there's,
Well,
I mean, there's also money to be
not
made.
universal.
So if I tell you, on average, the really good companies on the London Stock Exchange would pay you dividends at about say 4 or 5%, and like I said, that's decent for this country because inflation is 0.8%. So really, that's a lot for them.
Yeah.
You are beating inflation by far and all that. But the average company on the Nigerian Stock Exchange, I mean, it's really good companies. You see companies giving out dividends as high as 13%, 12%, 10%, in terms of dividend payout. Let's say, I mean, if each unit of the share costs, say, 20 naira, for instance, you're getting like 2 naira per share. Imagine if you put like 100K there. That's some significant money. You're getting like, I mean, 10K on your money. I mean, and all you did was just, and the thing is, you don't even have to put it there all year. You can just buy like 2 months before they declare their dividends. And you'll be fine. So it's good money. So it's not just emotional. The emotional bit of it is
No,
that
yeah.
I
The
know
emotional
that
one.
this
In
country will
addition to
not
that,
disappear.
recently there's been a lot of well, not recent, well, yeah, recently, cryptocurrency and all the talk around cryptocurrency, and like it seems to be, the in thing, everybody is, is now this whole language. Are you buying ETH? Are there's all kinds of conversation around cryptocurrency. And you know how it is, oh, this is what's making money now, so better get involved, better get on it. So of course, I didn't know a lot about it in the beginning. I started doing some research. I started asking people questions, and they're like, "Oh my gosh, you need a wallet." And I was like, "Fabulous! I need a wallet." What do you think about cryptocurrency as somebody who has been into investing for a while? How what do you think about it?
So, I mean, I went to the first time I heard about cryptocurrency, I think it was like 2017. So I had this colleague at the time, right, that was like, Bitcoin is the way. And this was 2017, right?
Yeah, actually, I remember.
So at that time, I just felt, man, you guys, it's just another random scam because everybody that sent me anything on cryptocurrency then was just a scam. So I was just like, please, I'm not interested in this. I'm fine with my stock markets. At that time, I was still on, let me just invest in my stocks and I'm happy. If I can get some property investment, I'm okay. There's no need for any cryptocurrency, or anything like that. Over the years, they become a bit more established. I think that's the word to use. And I started to read about him just like you. I mean, recently, especially when you start to hear of the kind of people that are investing in cryptocurrency, when you started to hear of established organizations investing in, I'm not talking about Elon Musk. I'm talking about Elon Musk is he's just having fun, but I'm talking about like when you have investment companies, finance companies actually buying cryptocurrency and investing in it, then you are like, okay, this is giving it a bit of legitimacy. All right. So I decided to read up a bit on it. And of course, once this starts to happen, the price starts to go up and all that. Now, one thing about legitimacy, a lot of the financial systems of the world the only thing holding them up is just legitimacy. It's just that some people have decided that these banks should operate in certain countries. So a lot of them are tied to you have Nigerian banks are tied to the Central Bank of Nigeria, and they're given legitimacy by the laws in the country and all that. And you have the same thing in the US and the States. Cryptocurrency is not deriving its legitimacy from a country. That's where, okay, don't let me say cryptocurrency. Bitcoin is not deriving its legitimacy from a country, right? It's deriving its legitimacy, so to speak, from, now I'm going into a gray area where I'm not totally familiar, but it's deriving it from the fact that it's something that is unique and can be tracked, basically. Like, let me just leave it like that. Now, how do I see it? I think, again, it goes back to that principle of investing in things that you understand. Now, a lot of people, when they start talking about NFTs, I don't know if you've heard of NFTs as well. When people were buying NFTs, non-fungible tokens, and they were buying paintings, NFT, okay, maybe you haven't heard about that one. That's where ETH comes in, actually. But a lot of, when you talk about cryptocurrency, so there are three levels to it. There's the whole technology itself, which has multiple uses, right? But when we now come to the currencies or the coins or Bitcoin in particular, there are different types of coins. Now, because I do not have the interest in researching every single coin, the few that I've picked, right? Let's take Bitcoin for starters. The way I see Bitcoin, because it's one of the oldest or practically the first in terms of crypto.
Yeah, it was one of the earliest.
A lot of people have a lot of faith in it. There's a lot of money in it, and that's giving it some sort of legitimacy. Now, in terms of its value or as an investment, the way I see it is the same way I see something like gold. Gold in itself is just a piece of metal. It's not inherently, you could say it's valuable, but a lot of times when people trade on gold and when people invest in gold, they're not investing in it because, oh, you can create a gold tooth for this. It's not like they've calculated the the value, the supply chain and everything. They're just investing on it based on, I'm buying this gold now and I'm hoping that in 5 years time the price will go. It's the same way people invest in most commodities, oil, rice, wheat and all that. They're buying it anticipating that the price will go up. Most people that buy land and hold, buy land and hold. That's why you hear all this hold, hold, hold. The idea is you're buying and holding that HODL. You're buying and holding, hoping the price will go up, which is pure speculation.
Yeah.
And that's what a lot of people do with Bitcoin. They're buying it and holding it and hoping that the price will go up in another, I don't know, few months, few weeks, few years, and when it goes up, they can sell it. That in itself is, you haven't created any value. There's no business around that. It's just an item that we've all given legitimacy because we all believe that it has some value. It doesn't have any inherent value in itself, right? It's not as if Bitcoin has any. If you want to use it as a currency, they refer to it as cryptocurrency, but if you want to use it as a currency, it's actually not very efficient as a currency. It takes time. The transactions take time, and it's actually simpler unless you are trying to do something that requires a lot of security and everything. It's simpler and easier to use regular dollars or pounds or any other currency than to use cryptocurrency. It's the same way it's easier for me to give you cash than give you a bar of gold. Even though the bar of gold might be expensive and have the same value as the cash. But you'd rather collect cash from, like, if I wanted to pay you for a service now and I had gold bars that have the exact same value as cash, you would probably take the cash if you needed the money. unless you are interested in in an investment and all that, you probably like, just give me the cash. Do you understand? It's like, instead of me giving you gold, then you have to start looking for a way to convert the gold to cash, or where we even save it and all that. And you see this you are having the same challenge with cryptocurrency. You need to get a wallet, then you need to buy something. You can't use it. You have to have a ledger somewhere. It's not very useful as a currency. But the same way gold is not very useful as a currency, but we all believe that it has value, right? Which is fine. So it's giving it some legitimacy. So now some people are buying Bitcoin today, just the same way people are buying gold today, and they are holding, hoping that in a number of months or years the price will go up. Then they can sell, and then they make the money. So that's really how I see Bitcoin, for instance. So really, if you invest in it, and I have some Bitcoin, I have some money in Bitcoin. If you invest in it, you need to understand that this is what it is. It is not inherently valuable. It's just something that it's more like you are taking a gamble, right? We are all just hoping and praying that the price will go up. Which is why you see people lamenting on social media whenever the price dips small. I'm like, the price can dip now, because the price can go up. It can go up and it can go down. It's just a gamble, right? Which is why for that kind of thing, you put money that you don't mind if it goes to zero, because you know that it can go to the moon, just like they say, it can go to the moon, or it can go to zero. Either way, it can happen. Just put any money you can risk, But it's just to understand what it is. Once you understand what it is that you've invested in, then it's fine. But if you're investing in it like, oh, this is going to be my pension, I'm sorry for you, it's not your pension. Now, the way it gets a bit interesting is when you look at other things like ETH. Now, the thing about Ethereum that makes it interesting is beyond just being a currency, it involves another application of blockchain technology. The beauty of blockchain technology is it keeps a register of every transaction that has happened using it on the blockchain. All right. So what Ethereum does, or can be used for beyond just as a currency, it can also be used as a currency. Just like almost anything can be used as a currency, to be honest, so long as there are enough people that agree that, oh, we all want to use this item as a currency, it will be okay as a currency. What makes Ethereum a bit better is beyond just using it as a currency, you can also use it to have like digital contracts, or basically because it can save a history of everything that has happened. So that's where NFTs come in. So for instance, let's say I sing a song, but I want to sell the royalties of that song to you. Normally, if I want to sell the royalties to you, I would be sign a contract with a court. But with something like Ethereum, I can do it quite faster, right? I can just set up that whole transaction with Ether and transfer the rights to you. And so long as you have the rights details and all that, you own that royalty or those rights. So that's something else you can do with Ethereum that you can't really do with Bitcoin, because Bitcoin was set up just to be a currency. But Ethereum is a bit more intelligent in what you can use it for. So you can use it as a currency. You can also use it as a store of contracts and other things. I'm turning this thing into a lecture. But one other thing that makes Bitcoin a bit more valuable than Ethereum is that there's a limit on the number of Bitcoins that will ever be created. So at some point, you will run out of Bitcoin. So it's not as if you can always have new Bitcoin every year. So at some point, there will only be a particular number of Bitcoin in the world. So of course, so long as there's increasing demand, so you have 7 billion people on the planet, but you only have maybe 1 million Bitcoin. So long as more people say, I want to buy Bitcoin, the value will continue to grow. So that's something else in its favor. But if we all say we don't want Bitcoin or we don't care, then that's it. Do you understand? So what's giving it legitimacy is the fact that everybody wants it, everybody's trying to buy it because they are hoping that the price will go up. The day we all say, okay, we don't care if the price goes up or down, then that's the end of Bitcoin. It's very, very unlikely that will happen, but it's possible. But Ethereum, on the other hand, has an unlimited supply. They're going to keep making it. Not like they're going to keep. They can keep making it. They didn't put a restriction on the number of Ethereum coins that will be generated. Now, that means the value may not go up like that, because if something is scarce, it's likely to get more expensive. So it may not get more expensive in terms of the cost, but because of the other usages that it has, the demand may continue to rise. So that's the difference between Ethereum and Bitcoin. But again, try and understand whatever. So to summarize all this long story that I've said, just try and understand whatever you're getting into. Understand what you're getting into. Don't put money that you can't afford to lose. This just general advice. Don't put money you can't afford to lose in something as new as this. But it's a whole new world, right? And even me, I put money there, but
That is fun. Okay, so thanks for the lecture on cryptocurrency. I think I still have some research to go and do now. But yeah, thank you for that. What would you say has been the best investment you've made, maybe in the last 1 or 2 years? Looking at
the first one that would come to my mind is this agro investments that you have in Nigeria at the moment. So you have companies like Agropartnerships where
I got nightmares in my head, I fear that the thoughts build up until I can't hear, that my mind fills up into a creature, and it haunts me somewhere much deeper. Anxiety.
It's not like you putting money in stock market and just chill and you see the value grow and you also paid a dividend. So for me, that's almost like a compounding effect. So for me, that would be a really decent one, because Nigerian stocks in the last couple of years, if you pick the right companies, have actually done pretty well. I mean, I'm talking about companies like United Capital, Zenith Bank, especially the finance sector, banks and finance sector. They've actually done very, very well. If you look at their performance, even last year, Nigerian Stock Exchange was the best performing stock exchange by the end of last year, by the end of 2020. So for me, that's really where I would probably look at that. Okay, all the money I've been putting in stocks, especially when the prices were low, and the way they've actually multiplied, have actually, in Nigerian stocks that is, have actually been pretty decent. But again, what we said earlier, because of the exchange rates. So really, if I'm to really, really think about it, I think that my best investment has actually been the money I put in that account in the US.
The US that just
And there was no interest, no nothing. It just sat there, and then the naira devalued. But I made I'm reluctant to mention figures, but I made like an extra by doing nothing, just the money just being there. Do you understand? So again, it goes back. The lessons are hedge. It's good to invest in stocks in Nigeria, good to diversify and all that. But one area you need to always have some money in foreign currency. Yeah.
excellent. Thank you.
No money you need in a hurry, but just keep it.
Money you need, you can lock away for a little while.
Yeah.
So if someone is interested in, maybe starting their own investing journey or learning about finance in general, right? What are maybe 1 or 2 books or resources that you would point to for someone to say, okay, read this when you're starting?
I was going to say, just go to my website.
But
Okay, well,
to
actually,
be
that's
honest,
actually a great place to actually start, because I've been, to your YouTube channel and followed some of your videos, and I think there's one you did on what can you. I think there was one on
yeah, look at I use 100,000 naira.
what can you use 100,000 naira to do? What 10 investments can you do? These are really nice places, like basic resources for people who are just at the beginning of their investing.
I agree. Actually, you're right. All jokes apart, right? The reason I started the channel in the first place was because I was having conversations with colleagues of mine that, just like you mentioned at the start, they are just reluctant to get into it because they don't understand it. And they're like, this whole thing just sounds like some mystery, and they just want to stay out and just keep it. I actually had a friend, I met someone some years back, and she was like, she prefers to put her money in the savings account and just be looking at it. She does. I mean, she's fine. Let them be giving her 1% interest. She doesn't care. She sure knows her money is there and all that. And I did a video on why you shouldn't do that, because really, you have inflation that is gradually eating away at your money. So that money that is in the savings account is actually devaluing. It's losing value. But yeah, so that was one of the reasons why I created that channel too, for my friends basically that were trying to understand some concepts in investing, and they felt it was a bit scary. I was trying to see how I could break it down in a way that it wasn't that mysterious. But in terms of the books that have helped me, there was a book I'd read then, I read again just recently. It's called The Richest Man in Babylon. It's a very kind of cheesy title, I know, but but actually it's a very good book, because it's a collection of stories all set in Babylon, in ancient Babylon, but it sort of teaches you certain principles about personal finance and investing that will always be applicable, no matter which situation, no matter which country, no matter where you are in your investment journey. Those principles will always be applicable. So I think that's one very good book that I would recommend. That I think it was one of the first books I actually read when I started reading about personal finance, and till today I still refer to it. Another one that I would recommend, it's almost like cheating actually if I recommend this book, but it works. So the book is called 50 Prosperity Classics. Right, it's one book, but it's called 50 Prosperity Classics. It's by Tom Butler Bowden. It summarizes 50 books, 50 classics about money and personal finance. So just like a quick short summary of each of those books, the core lessons. So all the long story they've written in the book, they just condense it into what's the meat of the matter, what's the real lesson in the book, right? And you get a lot out of it. I used to listen, so I had the audio version of the book then, and I used to listen to it all the time when I was driving to work when I was in Lagos at the time. And there were so many things I learned just from listening to the book. Some of the books that they summarized, I later on went to buy the actual books, because you want to flesh out that understanding a bit more. But at least it gives you somewhere to start from. And it's a very, very, the summaries are really good. Like, even if you don't buy the books, just listening to those summaries or reading those summaries helps you to get an understanding of it. And they broke it into three levels. How to get money, right? So if you are just starting and you're trying to make money, so how to make money, how to invest it, and if you want to give it away, like for, old people that have made it and now have billions. So they want to, so it has stories of different books that cover all those parts. So it's a very good book. So I would recommend those two books, and I recommend my YouTube channel.
So your YouTube channel, The Richest Man in Babylon, and 50 Prosperity
Classics. Yeah.
Excellent. Awesome. Thank you for that. And so what is your favorite personal finance book besides your YouTube channel?
It's probably still The Richest Man in Babylon, because I enjoyed the story. So, Richest Man in Babylon, I think I'd read it. I read it when I first read it when I was in university in my final year. Then I read it again when I was 7. And
7?
Sorry, 7.
Oh, wait.
Like NYC, not 7 years old. Yeah.
I was like, wait, what?
No. When I was 7, I was reading. What was I reading? I was reading the Famous Five and Chronicles of Narnia. No, I read it when I was 7, when I was doing my NYC. But since then, I don't think I had read the book again until this year. So I read it again this year, and the first time I read it, the first part of the book more or less blew my mind. It was like, these were new concepts to me. I was so excited to learn it and all that. But when I now read it again this year, it was other parts of the book that now occurred to me, because I now understood things. Like, there were stories in there that were sort of like allegories for 9-to-5 work, but I didn't pick it then the first time I read it, because I hadn't experienced 9-to-5 like I have. But now I have over 10 years experience, 95. I understood exactly what they were trying to say. When I now read those parts again, it now spoke to me again. So it's like, it was useful then at that stage of my life, but now it's useful again at a different stage of my life. So I think it's a very good book, and it's a book I always recommend. And it's interesting too because the stories they're nice stories. Like, they're not just talking about money. They're actually you are curious to see what happens. To what happens to different characters and all that in the story.
10 years from now, what does your investing journey look like? What are you?
So I don't know if you've heard of FIRE before. FIRE. It's an acronym. So it's an acronym for Financial Independence, Retire Early. Right. So it's a principle that a lot of people in America are kind of living to. So a lot of young people actually plan to they're trying to retire in their 30s. They're trying, some of them are even trying to retire before 30, before 40 and all that. But the idea behind that really is not just so much about retiring, it's about not having to work to survive. Like, you choose to do the work that makes you happy or that you're interested in, as opposed to working because you need to collect a paycheck. And that's where I want to be in another 10 years or less, hopefully. Like, my goal going forward now is set up different investment buckets, right, in Obodo Ibo, so that I'm consistently earning FX. And then in 10 years, I can retire to my own country with FX flowing into my pockets. And I can do anything I choose to. So if I want to now go back and start the youth, whatever academy, to be teaching people how to swim or how to make movies, I can. But I'd like to be able to do stuff that I am interested in, as opposed to I have to resume at 9 o'clock and work till 5 every day so that I can be collecting my salary and all that. My being here, really, what I'm trying to do is just set up those investment channels so that I can go back and do what I want to do. So I can retire, I can retire from 9 to 5, and actually do whatever I feel like.
Now, as somebody who is listening to this or watching this, and what is 2 or 3 practical things that someone can do now to start if they haven't started?
Start by keeping it simple. So the investing is not rocket science, but it requires you learning. And the beautiful thing about life is, there was even a video I was watching a couple of days ago where the guy was saying investing has been solved, because really today it's really not that difficult to invest anymore. Unlike it used to be. Like, when I started investing, if I wanted to buy shares, I'll first of all go and write check. Then again, I'm revealing my age. I'll go and write check and I'll call my stockbroker and I'll say that give me a fill form, do this, do that. Now I can do that on an app, right? And not only can I buy stocks on an app, I can actually buy into mutual funds on an app. So, and the beauty of mutual funds is, well, depending on the type of mutual fund you picture, they tend to be a safer way to invest, right? Because again, I've invested in certain mutual funds that the money went out. So it depends on the mutual fund you pick. But I think the important thing I would say is start with money that will not make your heart cut, and just try and learn a bit. Start with one item. So if you say, okay, I want to invest in mutual funds, what kind of mutual funds exist? Because you have mutual funds. I'm using mutual funds, but in some other countries they refer to them as ETFs. You have ETFs, exchange traded funds. You have ETFs that track the US stock market. If you invest in something like that, right? Like you buy an ETF that tracks the S&P 500, you can just buy and go and sleep. And you know that you get dividends. It may be small because the dividends in US are even worse than UK. UK is like 4% average. US is like 3% in some cases, 3%, 2%. So your dividends may be small, but in terms of it will rise. I mean, the value of that investment will rise over time because on average, the value of the market will rise. So even if Facebook goes up, Amazon goes down, so long as your ETF is tracking the entire market, your ETF will rise. So that's one option. Now, in case you are in a situation where you can't afford to buy, or you don't know how to even invest in international funds or anything like that, and you have stock in Nigeria, for instance, like you can't invest outside Nigeria, still pick something. There are a lot of good Nigerian stocks that you can invest in. It may require a bit more knowing which one to invest in. Yeah, that's usually the challenge.
Stuff. I mean, I'm asking because this actually happened to me when I started looking at, someone was like, okay, open this account, you can invest in the stock market, da 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 da. And I get
and then you open and you saw like
right?
100 companies.
Yes, and it's like here's all the companies, and here's the column that shows you how they did last week. Did they go up or down? And all kinds of acronyms. And I'm just like, wow, this is going to be interesting. And I start looking. I'm like, oh, I know this company. I don't know the company, but it's a popular company. So maybe it's a good idea.
So don't you? That's one way not to invest.
The person, like the official at the company that I was talking to, so I'm like, so what is a good company to invest in? I'm trying to get some ideas and tips, and I guess it's tricky because they don't want to tell you invest in this company, because tomorrow if you lose your money, you'll be like, you're the one, it's you're the one who told me to invest in this company. So they're like, okay. And so she was just like very, she was just like, okay, well, here is what's doing well, and any company that has this particular rating or whatever, you can, are good choices, right? That you can now pay. They have I can't remember what it's called now, but they said
the problem is even the good choices, it depends on who's evaluating, right? So different analysts will do their own analysis. Some of them will say buy, some will say sell, some will say hold. So
it was like hold, it's like sell, hold, or buy. It was sell, hold, or buy. Anyone you see buy, you can go. And I'm just like,
it depends on who's talking. So the thing is, investing in stocks, it's almost a training on its own, right? So some case things you look out for. So for instance, one, what's the size of the company? And when I say size, I'm not saying how popular is it. I'm saying in terms of the assets that it has. Does it have like up to 50 billion naira in terms of assets? Right. I think that used to be my benchmark then. I think it needs to go up now actually, because the exchange rate has devalued. Because really I was converting from dollars. I think the metric I used to use was $100 million. But the thing is, you want to know that it's a solid company, that even if it crashes today, that money is not all those, as I said, they're not going to evaporate. Someone will have to buy it. Even if they say, oh, the company has collapsed, they will still sell all those assets. That 50 billion naira has to go somewhere now.
So what is this information that you're able to have access to?
So the beauty of investing in the stock market is all this information is available. It's public. Right. That's why they call them publicly listed companies. So they have to put out all that information, and their accounts and all their books have to be audited every year, right? So before they can, I think some of them even audit them every quarter. I'm not sure, but I know at least every year you have to put out financials that are fully audited. Meaning you can't just put out rubbish there and say, oh, we are $1 billion. No, you have to. Some group of accountants would have gone through all your books to verify it, and that's just one out of like 5 things I look out for, because you have some big companies in Nigeria that are crap. I would never put my money in another company in Nigeria. Let me just tell you that, and they are big. So the size alone is not enough, but that is one. Right. The other thing I would look for is, have they been making money in the last 5 years? Not share price. So I don't even look at. I'm not talking about the share price. I'm talking about the company itself. Have they been declaring profits? Because your share price can be going up, meanwhile you are losing money. All these American companies, the Tesla and all them, some of them were not making money, but their share price was going up. Yeah. Meanwhile, they were not making company. They were not making money. People were just hoping and praying that this company will do well. This company will do well. Meanwhile, it's not making money. Twitter, I'm not sure, but I don't think Twitter has started making money. But share price has been moving. So I don't invest in companies that are not making money. They need to be profitable today. Not they will be profitable tomorrow. I'm not say I'm not I'm not your I'm not your father-in-law. I'm not trying to sponsor your business. It's father-in-laws that sponsor business like that. So that my daughter's husband will have something to
Your
do.
father-in-law, you're watching this.
No, I don't do that kind of thing. We must be making money today. So that's the second thing I look for. Then the third thing I look out for is okay, you're a big company, you are making money. Are you paying dividends? This is where my own strategy sort of deviates from other people's strategies because some people don't really care about dividends because typically companies that pay dividends, their share price, okay, let me leave Nigeria. When you're looking at the London Stock Exchange or US Stock, New York Stock Exchange, most of the companies that pay dividends, their share price doesn't go up because they're taking out of their profit to pay investors some money. So share price may not go up like that, but I don't mind. I like it. Let me let me collect my money now. So I prefer I look at their track record in the last 5 years. Have they been paying dividends regularly? Right. So they've been making money and they've been making enough money to pay investors part of it. Right. So that's something else I look out for, consistent dividend payments. And then I now look at before I now start looking at the price. And when I now look at the price, then that's where you now start getting a bit more technical because you now need to get certain ratios like, what's the price to earning ratio and all that. But all those things, again, all this information is available. It's just, you knowing where to find it. But it's available. It's available on the internet, right? It's publicly
Just
available
even knowing
information.
to look for it, not even just where to find it.
Yes, so exactly.
Because
So
it's not
now
like
at
you go to
least
That's why I said picking the right stock is a whole training on its own. But it's actually easy. It's just that you just need to learn certain that a lot of these things are things I had to learn by myself over the years. But one thing I found out is a lot of that information is now so readily available. It used to some 5 years ago it wasn't this easy to find a lot of those things. But now there's a website that I can just go and get all the information once, and I'm fine. But in terms of what I would tell if someone that is just starting off, I would say just start with where did I started with shares, for instance, and um I read up everything I could read about it and I started practicing, with my money. So I'll put in some money and see how the company performs, learn a bit more, change my strategy, and then it worked. You could decide, okay, fine, I want to learn a bit more about property investments. How do it? Because again, that one's it's a whole life on its own. And it's a lot easier to. So that's one area I want to get involved in here because it's a lot easier to do in a more established country like the UK than in Nigeria. Nigeria, because you struggle with documentation and all that. You doing due diligence is a bit more difficult in Nigeria. So that's one thing that put me off property investments. But again, I have friends that have invested in property in Nigeria, young landlords and landladies from 30, already, just bought one rundown house somewhere, even without a lot of papers. They bought it, they touched it up, they rented it out, and they were making their money. So that's another area. And if it's money, mutual funds, just stick with money markets. Money market funds are typically okay. In the last 1 year, like I mentioned earlier on, it wasn't really great, but it's for me, for someone that doesn't want stress and doesn't want to do all the analysis of stock markets, doesn't want to bother themselves about due diligence for property investments, doesn't want to be looking for, okay, how do I change naira to dollar so that I can buy shares in America? That kind of person, I would just say, just call your investment company and tell them you want to invest in the money market fund, whatever money market fund that they have. Typically, your principal is safe, and then they just keep rolling it over, compound interest, just keep rolling it over and over time. The money grows, But there are a lot of options out there. It's just to start and try and keep learning. And believe me, it's a lot easier. I can remember how like I struggled a lot with getting information when I was starting out. But now you have YouTube videos. Like there's so many YouTube videos explaining this. Well, there weren't a lot of them for Nigerians when I mean a couple of years back. But now you have a lot of Nigerian YouTubers that are now, because YouTube videos that talk about finances, they seem to make a lot of more money than videos that talk about movies and all these other things. So a lot of Nigerian YouTubers too are beginning to shift in that direction because that's where the money is. So there are a lot of videos out there, that tell you what to do. There are a lot of
just really a matter of you taking the time to learn and to go and
and it's not really very complicated because you can learn forever. Don't spend 1 year. It's just starts with
or to start and learn and continue and learn.
Just start
and take it gradually, one step at a time. But start by my channel. Watch YouTube videos.
Yes, shameless plug.
Yes, correct.
Okay, so thank you so much. But honestly, it's been an incredible conversation. I've really actually learned a lot. I'm like, okay, you need to start doing this, think about that.
There's a lot of information out there, right? Just pick one or two and act on it, and you'll be fine.
Yeah, I think that's it for me. One thing that you said that was really interesting was you talked about investing and then growing your money over time. I think because a lot of people sometimes in our context want to be rich immediately, like they want the money to come tomorrow and they want to blow up immediately. But investing, I think,
wanted the money to come.
yes, even you. So what I'm learning is that investing is a process, right? And it's also about growing gradually and thinking long term when you begin to invest. I'm not saying that you cannot get the money, now, but you also want to, as I think most of the great investments are the ones that allow you to also grow your money over time and grow your wealth over time. So, which is why starting now is important, because you start now, you can begin to build.
That is actually a very, very good point. And I think I missed it, all the iteration that I was speaking. Because the thing about investing, there's a saying I've been hearing. They will say, time in the market is better than timing the market. Timing the market, it is like, you are trying to target the best time to buy these shares, because you are looking for the best time to invest in the market when prices will be cheap or when the price will drop. It's better you actually just make it a habit, and which is what I did, like you said, every month. So start off the year and say, okay, in the next 12 months, I'll be investing in either these companies on the stock market or money market funds or whatever you choose to invest in, But then every month I take religiously take a portion of my salary. It's just 50K every month. I put it in those things that I said I'm going to invest in every month, consistently, every month, and it's better to do it that way than trying to say, I'm hoping that this time maybe next month the price of this thing will go down, then I can buy it and all that. It's
when I get a million,
when I have saved this amount, then I'll use it to buy this, or when they pay me bonus in December, then I will now invest. No, every month from your salary, don't forget about bonus. Every month, when bonus comes, you worry about how you use the bonus. Every month from your salary, take out something and invest with that thing. Even if it's money market fund you just buy, or if it is pick some companies on the stock market, or it is to put some money in dollars and keep it, let it just stay. Just every month, take out something and invest. It does wonders for your portfolio, and you won't even realize it until maybe 4 or 5 years of maintaining that habit that you realize, wow, this is actually a significant amount of money. And compound interest, is also something else that helps you. So for instance, if you invest in stocks every month and every now and then, apart from the fact that the share price goes up, they pay you dividends. If you put those dividends and reinvest them in the company, the impact of that is compounding. Same thing with money market funds. If you put some money, let's say you put 50,000 naira in money market fund in January, and by December it's down to say 55,000 naira. You now put that 55,000 naira back again. By the next time, it's now 50. So you continue to reap that snowball effect, basically, of that investment, and it can have very significant impact in the long run. So yeah, that's actually a very good point that you raised about time and consistency, because time is your best bet. Everybody has time. Even if you don't have a lot of money, everybody has time. If you can use that time, let's say if you're 30 and you want to invest for the next 10 years, right? That's a lot of time that you can actually use and make a lot of money by just investing consistently every month. It's a very valid point.
Awesome. Well, it's been an incredible conversation, Modupe. Thank you, actually, and have a lovely day. Hopefully, by the time we have this conversation again, I will be, getting somewhere.
I'll be glad to hear that.
So much. Yeah, thank you.
All right. Cool. Thank you very much for watching till the end. If you found this video helpful, please do 3 things for me. 1, leave a question in the comments below and I'll answer it in the very next video. Subscribe so you know when I drop that next video. I'll be making more videos on similar topics. So, and 3, make sure you take action on one thing, at least one thing from this video. Tell me what that one thing is in the comments below. Don't forget, we don't just want to keep the gist going, we want to get our money growing.